Hi, welcome to the April edition of the Horizon Videozine. This is Rahul Sharma here from JM Financial. A quick recap as to how the month March went. We had a cautious stance on the Nifty as it was approaching a crucial supply zone at 22,500 and we saw a correction, although a shallow one. It was a mid and small cap space which saw the major brunt of selling pressure, due to which we saw stocks down as much as 30, 40, 50%. Well, the Nifty view played out to be perfectly well, and now the Nifty has now changed gears and ready for the next month. Well, if you recollect, we also had a positive stance on the IT space. Well, that is taking longer than expected as the results, especially in the US markets, were not so comforting for the street. And then we had outlook on the other two sectors, which is the precious metals, gold and silver, both of them doing excellently well, and oil, which was also shaping up to newer highs. So net March was a subdued month for equities, but gold, silver did their bit, and as well as oil, which remained positive. Now coming on to the month of April, which is where a lot of interest is there. Yes, it is a new financial year. Yes, Nifty has completed its correction, a very short-term correction in its place, and now it is ready to ask questions about the ceiling. So if we look at the beginning of this data, so clearly the upper boundary of this range is coming to 22,525 for the Nifty as per spot levels on a closing basis. And on the downside, 22,000 is a very solid base, very solid support for the Nifty going into this series. If we look at some of the derivatives data, especially the rollovers, that is indicating that weak hands are out of the market after this correction. So if we look at the Nifty numbers, the rollovers stand at 70% vis-a-vis an average of 81%, and the OI base is also smaller by 13% month on month. Market-wide rollovers also are on the lower side at 81%, 87% as compared to 91% of the last 3 months average. But here the base is slightly increased month on month in this expiry. Now, the institutional positioning of the market is like the FIs are still short into the system, although the level of aggression or the quantum of shorts has come down significantly. So at the start of this series, we have around 24,000 contracts which are short in index futures, as against 59,000 contracts which were short at the beginning of the previous series. Now, the long short ratio has also improved at 45% vis-a-vis 35%. And the stock specific longs or the individual directional trades that FIs have taken in stock futures, they are at a significant high. At the beginning of this series, they quoted at 4.48 lakh contracts long as compared to just 0.78 lakh contracts at the beginning of the March series. So clearly it is FIs are playing it directionally. At the same time, the short aggression has come down in the index futures, and the cash game is where the dominance still continues. So if we look at the DII numbers, a substantial 56,312 crores have been pumped into the month of March, whereas FIs, which have been sellers for the last 2 months, prior to this they were sellers in January and February. But in March, they have turned net buyers and added equities worth rupees 3,314 crores. So clearly, the pressure seems to be coming off on the cash side by FIs, and at the same time, the derivative side is painting at least a positive picture for stocks as of now. Now, stock specific, there were high rollovers seen in auto, realty, textile, while low rollovers were seen in capital goods, technology, and media. Now, stock specific high rollover stocks were seen in SAIL, Steel Authority of India, Sun Pharma, while low rollovers were seen in Jindal Steel, Metropolis, and Tata Chemicals. Now, the option chain is suggesting a range of 22,000 to 22,500 for the week, but for the month, this range is much bigger at 22,000 puts on the downside and 23,000 calls on the upside. So, 1,000-point range as of now is indicating that the risk reward is increasingly favorable as Nifty comes closer to the 22,000 mark, and on the upside a possibility of 23,000 is also on the cards. Now let us summarize this view. So in short, the strong weekly and the monthly closing that we've had at the end of March, plus the strong bullish positioning by FIs in stock futures, and the reduction in aggression on the short side all mean that Nifty should aim for a decisive new high. Possibility of 23,000 on the upside is pretty high. Use corrections or dips as buying opportunities. So this month we have two big events happening. One is we have the general elections which will be started, and we also have the Q4 numbers which will come out, which will keep a lot of action into the stocks. So keep an eye on these levels. The demand zones for the Nifty are placed at 22,200 and 21,900, whereas the supply side or the resistance for the Nifty is placed at 22,525, like I said, and 23,000 on the upside, which is where the option writers are present. Now, both the monthly close for both the indices, which is Nifty 50 and Nifty 500, has been quite good. So on a month-on-month basis, we expect April to be a good month. And historically, Bank Nifty has seen, like April has been a good month for Bank Nifty historically, so that should bode well, especially for the bulls in the banking space. Now, outperformance as can be expected in these sectors. Bank Nifty is obviously there. Then you have metals, realty, auto and pharma, whereas IT and FMCG is one space where the outlook remains neutral to negative. So net, this is how we see the market going into the month of April. And what if you are investing for this financial year? So this is a new financial year. What is the triple S strategy that we are recommending, or the triple S basket that we are recommending to our clients? So to frame it in a nutshell, it is the time frame remains 1 year. These are the ideas where we feel there is a significant upside of 40 to 50% that can be had in these investments. And it is a focused mini basket, meaning just 3 ideas or 3 things that you can look to buy in this market for the next 12 months, which can deliver sizable alpha. And the deployment is advised to be in 2 tranches. So one tranche can be initiated at this level. Another tranche can be initiated if there is a round of volatility that happens around the election results. So keep this in mind when you are initiating this strategy. And as a risk management, what you could do is have a stop loss placed at 20% below this average buying price. And lastly, we expect the markets in this financial year, not only these picks, but also the markets to do excellently well given the backdrop of a possible rate cut by the Fed eventually, which should happen, and a possible rate cut domestically as well. And given an election year in the US as well, so anti-market policies may not be the talk of the town, at least for the time being. So what are the triple S ideas that we are recommending? So the first S stands for State Bank of India. State Bank of India, as PSU banking index has given a breakout of the decade. So around 6 to 7 months back, we had highlighted that the PSU bank index is coming out of this mega underperformance as compared to the private banks, and that underperformance is now catching up. So in that catching up, there is a long way to go for something like an SBI, which can be bought at these levels. As you can see in this graph, multi-year highs have been taken out. In fact, this huge resistance line or trend line that we had has been taken out, and now the stock is ready to change orbits. So the stock can head towards 1000 rupees as our first target, and can even head towards 1200 as our second target in the course of the next 12 months. So if you have that kind of a time frame and you can invest for the 1 year time horizon, SBI is our top pick in the banking space, which can deliver the alpha. Now coming to the second S. So a standard disclaimer, I am holding this stock in my own portfolio. So I am recommending SAIL, State Authority of India. Metals have been doing excellently well over the past few months, and metal index is poised to go even higher. In a space like this, SAIL is one setup which looks very promising, especially on the long-term charts. As you can see, this is the monthly chart that we put up. It's a very big rounding bottom that we can see on the monthly charts. Yes, it will not be a straight line. Volatility will be there, so one can look to buy in 2 tranches in case there is a correction closer to 120. One can look to add again, or one can look to buy at today's prices, trading somewhere close to around 150 mark. The target for the stock is placed at 200 and 250 on the upside. So these are 2 targets that we are expecting SAIL to test in the coming 12 months. So one can look to invest in this stock for this financial year. And lastly, silver looks pretty solid at these levels. If you see this graph, in fact, we've spoken of this triangle pattern many times in our interviews in on this platform as well. Silver has finally taken out this triangle, and what this means is, and this is a 4-year triangle that was formed on the monthly charts, on the weekly charts, and such long-term structures, when they are taken out, they are generally followed by big decisive moves and moves which are trend setting. So anything that happens to China, that is positive for metals. Anything that happens to China, positive for metals, and positive for silver, which not only is a precious metal but also has an industrial application to it. So the outlook on metals plus the outlook on silver plus the relatively better positioning of China as compared to what they were same time last year, we believe silver is in a sweet space. Gold is already doing well. We have a positive outlook on the same, but it is the technical breakout, the big technical breakout is right there in silver, when one can look to invest. So you could buy Silver Beast, which is an ETF which is available on the exchange. Simply buy that and hold for the long haul. And we feel that silver can head towards, in terms of rupees, it can head towards the 1 lakh rupee mark, and which is approximately a 40-45% upside from current levels. And one can look to stay invested in. So these are the 3 triple S ideas that we are recommending for this financial year, for this month, and we feel where alpha creation can be had over the next 6 to 12 months time frame. So this brings me to the end of this month's this edition's Horizon Videozine. Look forward to connecting with you in the next one. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.